What's going on, guys? It's Jimmy here. Welcome to our daily show where we discuss everything going on here in our country that you need to know about here on a daily basis. We got some good news, a little bit of good news to start off with here. We got several different things to go over here for you guys here in this video. So let's jump right in. And don't forget that we are giving away money here to some of our viewers here through kind of part of what we're doing here. Part of what we're doing is helping out some of our viewers here. We're giving away turkey. Yeah, turkey dinners, or well, really cash. Yeah, as part of what we're doing. Remember, we gave away $1,000 for Halloween, and we're giving away over that amount here for Thanksgiving. So we're doing daily trivia questions, and if you can guess the answer correctly, you could win money directly from us. So pretty much every single day, we're doing a trivia question and in one of our videos. So make sure you're tuning in. And if you hear the trivia question and you guess correctly, you could win money directly from us. Yeah, so stay tuned. Remember, new videos come out here every day at 10 a.m., 3 p.m., and 8 p.m. Eastern Standard Time. And make sure you're subscribed down below to our YouTube channel. It's completely free to do so. Click the subscribe button, then the bell icon so you don't miss out on new videos. And also, thanks for liking these videos as well. All right, so let's jump right in here. Also, I want to say happy birthday to my beautiful wife, Laurel. Today is her birthday. Yeah, so also she's our editor here, so she will definitely see this message. But I want to say happy birthday to my beautiful wife, Laurel. We love you. Okay, inflation report here is out. These are for the October numbers because remember it's always delayed. You always get it here afterwards. So now we got it here in November here. So inflation's starting to go down. Starting to go down here. So you can see here inflation cooled more than expected. But prices are still up 7.7% since last year. But we'll go over here what this means and what this means here going forward. This actually sent the stock market rallying with a absolutely massive day, huge day. Dow Jones up over 1,200 points and the S&P 500 up 5% in one day, the biggest rally in 2 years after a light inflation report. Because remember, the stock market is always forward looking. So the way investors and the stock market and well, pretty much just everybody that's watching this type of stuff is thinking, at least according to this newest report, is that they think inflation, we may have peaked and we might be on the downtrend now. At least according to Wall Street, or at least according to people buying and selling stocks, according to people. Remember here that about 50% of Americans have money in, we'll go with 50% of retirees. 50% of people retire and have money in the stock market, 401ks, IRAs, pensions. So when you see a big jump like this, so this year's been really bad for the stock market. But last year was really good for the stock market. Last year, actually, you can see here last year, the S&P 500, which is basically the top 500 largest companies in the United States, that's the S&P 500, ended 2021 with nearly a 27% gain. This year, it's kind of basically given it all back for the roundabout most part here. Okay, so the question here is what will happen going forward? You know, if we knew that, you know, everybody would be a billionaire, right? You would just be rich because you would know the future, right? But because of this new CPI inflation data, looks like inflation's starting to go down. Luckily, this is happening right after the Social Security inflation rate is already locked in. So remember here that Social Security is going to be getting the 8.7% raise, cost of living adjustment, That's going to be hitting here for January. In fact, some people like on SSI will actually be getting their first payment at the end of December. It's actually December 30th because the first, which is when you would normally get your payment, is on a holiday. And I believe the 31st is on a Saturday, if I recall correctly here. Let me look at the calendar. Yes, that is correct here. So, believe it or not, SSI will actually get their payment on December 30th for their January payment, which will include their raise. So, even though here the inflation now is at 7.7%, already starting to go down, the raise for Social Security, SSI, SSDI, VA, RRB, everybody underneath the Social Security umbrella is locked in at 8.7%. So this is really kind of good news for everybody. We got that raise locked in. That is a permanent raise. It's locked in. It's good to go. It can't go down. And now we want to see inflation go down as fast as possible. Because remember here, the Fed actually said here that we're probably going to see more interest rate hikes coming here again in December and maybe even next year. And that's not good news because remember, every interest rate hike that they do raises the cost on things like credit card interest rates. Credit card interest rates are already at all-time highs at around 19%. And that was before the last interest rate hike, which remember, they just raised interest rates by 0.75% yet again, 75 basis points. And so now credit card interest rates on average could be going near 20%. And remember, that's just the average. That means some people are paying lower, some people are paying higher. The highest credit cards right now are around 35, 36%, which are out of this world. So if you're paying 20% interest, that means 20% of your balance you're paying in interest every year. So if you have a $5,000 balance, 20% of that would be $1,000. That means you're paying $1,000 in interest alone every single year because it's annual APR, annual percentage rate. If you have a $10,000 balance, that means you're paying $2,000 in interest every single year. Every year, 2,000, 2,000, 2,000, 2,000, and then you still owe the balance. Yeah, that's why they say credit card debt's the worst debt you could ever have, ever. Yeah, so, and the problem is also it's raising interest rates on mortgages. It's raising interest rates on cars, whether they're used cars, whether they're new cars, raising interest rates on personal loans. In fact, personal loans are actually, I think I seen a headline that said personal loans, the rates they're being taken out here are near all-time highs as well because so many people are struggling right now. So seeing inflation come down is the start of a good trend. In fact, here's White House economic top advisor Brian Deese. Here's what he says right outside the White House.
I'm sure you guys are very pleased to see this report. The take from the market, Brian, is that the Fed won't have to do as much tightening to fight inflation if we are really starting to see it come down. Do you agree with that?
Well, certainly this was a welcome piece of news, and it does represent progress. We saw that both on headline and core inflation, deceleration month over month. And when you look under the hood, particularly in core inflation, you saw some important areas like owner-occupied rent, which is an area that takes more time for price transition mechanism to start to move through. You saw some deceleration in inflation in that context as well. And for things that matter to American households, I think the deceleration in inflation in food at home, at the grocery store, is a welcome indication and consistent with what we have been hearing in retail and grocery channels of at least some softening over the course of the fall. So I think that is all positive sign. And at the same time, The rate of inflation is too high, and we're going to have to stay at this and stay focused on bringing prices down. I think that's what you heard from the president. That'll continue to be our principal focus in terms of the tools and the levers that we have here to keep making progress on bringing prices down.
As an economist, do you think we truly have seen the peak at this point? And I ask because we just got a reading from the Atlanta Fed GDP predictor showing that we're tracking 4% GDP, a potential acceleration here of the economy, which could bring up inflation again.
Well, look, I think that it is welcome that we're seeing some deceleration, certainly and absolute price declines in certain goods categories as well. And at the same time, we have to keep at this and stay focused on needing to see those price declines persist across time. And certainly there can be unexpected setbacks. There can be bumps in the road. And so we're going to, as we say, even in the months where we see more welcome data and also less welcome data, you never want to over-index too much on any individual 1 month of data. So we'll try to keep looking in the aggregate. But I do think that if you look across the economy, you are seeing some important signs of the resilience of the economic recovery in the labor market and in the broader economy, while we're also seeing some reduction in price pressures as well. That's the dynamic we want to see continue. It's the dynamic the president has been talking about for some time now, this transition to more steady, stable growth. And so that's certainly what we want to see. And certainly this data gives us more confidence that that's what we will see going forward.
So it sounds like you're not willing to say we've peaked.
Yeah, I think I'm willing to say exactly what we're seeing, which is we are seeing moderation and deceleration in these numbers. And we're seeing it in some areas that I think are good indications of what may come as well. The future is uncertain. We face a complicated global environment. And so both at both the headline and the core, we're just going to stay focused on what we can control. The good news is that some of the things that we're seeing, for example, on healthcare, health insurance, on prescription drug prices, on energy prices, policies that we have already enacted are going to start to take effect and help to provide additional price reductions here in the next set of weeks and months. So that's positive as well.
Now, I'll show you this chart here, which shows kind of some of the areas where the worst inflation is here. And a lot of it is food. This is the problem here. Food at work and school is up 95% from last year. That's just unbelievable. So basically, like food outside of the home, like at the grocery store, buying it at the grocery store and taking it home. So if you're buying food at work or at school, very, very expensive compared to a year ago. Almost double the price, 95% more. Eggs, 43% more. Airline fees, 43% more. Butter and margarine, 33% more. Public transportation, 28%. Health insurance, 20%. Honestly, health insurance is an absolute nightmare. That has been going up 20% a year for as long as I can remember. I feel like they have a monopoly on the system, and this is part of the reason why health insurance and prescription drugs and everything in that whole industry, just like colleges, and it's just an absolute nightmare. I feel like it goes up 20% every year, year after year, and it's just something has to be done about this. At least in that what bill was it? Was it the Inflation Reduction Act? They did it where they capped insulin at $35 a month, and seniors are going to get it at $2,000 a year. Will be the maximum out-of-pocket cost for prescription drugs when it kicks in here in like a year or so, which is $166 a month for people on Medicare. Health insurance is a nightmare. They can't keep raising the cost 20% a year. That means every 5 years it doubles. I mean, that's just insane. It's been doing this every year for as long as I can remember. Utility gas up 20%. Gas is going to be extremely expensive this winter. I'm telling you guys now already ahead of time. Energy overall up 17%. Gasoline up 17%. That's fluctuated a lot. Went up a lot, came back down. It's kind of been holding steady right now. It varies a little bit by region. But yeah, a lot of this stuff is food. Food is just very, very expensive. Electricity up 14% versus last year. Also pretty expensive. Isn't it sad when kind of 14% doesn't seem like all that outrageous, but it is? Yeah. So food at home overall up 12.5%. So that gives you an idea of how much overall food at the grocery store is costing. 12.5% more. Yeah, electricity actually more than that, 14% more. Yeah, and that's just the overall cost of like gas. Remember that a lot of electricity is gas. Yeah, I showed this the other day here. So when you look at electricity here in the U.S., a lot of it's gas. Natural gas, 32%, petroleum, 36%, and coal, 11%. All this stuff is expensive because it's got to constantly be taken out of the ground over and over and over and over. Renewable energy like wind and solar has been getting cheaper and cheaper and cheaper and cheaper. Solar panels have been getting cheaper and cheaper and cheaper throughout the year. And not only that, but like when you put a solar panel up, you don't have to pay for it ever again. I mean, think about putting a solar panel up on your home. 10 years later, it costs you nothing. 20 years later, it's still there. I mean, it's at some point, its lifespan runs out, but that's like 20 or 30 years later, right? But unfortunately, it's just not a large chunk of the pie. It's not a large chunk of the pie here. We know that gas and petroleum and natural gas prices have spiked, and that's a large reason why these costs have gone up. Pretty much all states have been adding wind and solar and hydroelectric things because the cost is a lot cheaper. You don't have to constantly be digging out of the ground. Not even counting like the less pollution and stuff, which is like an added bonus, right? Less pollution is kind of a good thing. It's just cheaper. You don't have to once you put a solar panel up, it just gets electricity every day for at least part of the day when the sun's out there. But all that's kind of figured into how much electricity it makes. But same thing like with natural gas and petroleum, right? Like when workers aren't there and stuff, it's not pumping. And when a hurricane comes, and they shut down, it's not pumping. And all that kind of stuff, right? All that's kind of figured into the algorithm of how much it makes. The problem is the cost of these natural gas and this petroleum and the diesel keeps going up and up and up and up. I mean, remember here, like, when I graduated high school back in 1999, I'm going to be turning 42 years old here in a few months. The cost of gas was like less than $1. I remember gas was 99 cents and even cheaper than that at some point. Now gas in California, $5, $6, $7 in some places. And imagine, so I mean that's happened in, we'll see, let me see here. How old was I back then? I was 16 and now I'm 41, 42. So I mean, 25 years, right? So imagine where it's going to be in another 5, 10, 15 years. I mean, the price of gas just keeps going up and up and up and up. So this is just going to happen. So when you think about like the government building like nuclear reactors, which they're not really building that many of anymore, the problem is the regulation. I looked into it. It's actually very cheap when they actually build it. It's up, and then again, same thing. Once it's up and running, costs very little because it's there. Problem is, it takes them like years and years and years to do the permits and all this stuff, and it's like a nightmare just to get it up and running. But once it's up, it's completely clean energy, and it costs very little. You just have to have a few people like man the station. You actually have less people man the station than you have like at coal plants and oil rigs and things like that. Way less people. Same thing with solar and wind. Again, once you put them up, they basically make energy every single day for free. You just have a few maintenance people there. Where if you think about the cost of oil and gas and diesel and natural gas, it's just getting more and more expensive every single year. If you think they're expensive now, imagine how much it's going to be in 10 more years or 15 more years. We're talking about $5 a gallon gas nationwide now. How much do you think it's going to be in 10 more years? 6, 7? I mean, the cost is only going up. They already have costs like that in Europe. Remember that the U.S. cost of gallon of gas is typically cheaper than most places around the world. I mean, we just looked at this here. You know, we looked at like some of the other countries in Europe. The cost of gallon of gas in Italy, $6.48 in U.S. dollars and U.S. gallons. Basically 6.50. You compare that to the U.S. price right now, which is 3.80. 380. So I mean that's like, 650, 648 versus 380. I mean that's like 50% more or something like that. And you can just pick any random country in Europe and their prices are way more. And this is not Europe dollars, which actually is almost the same right now. The euro and the dollar are almost 1 to 1 nowadays. You pick another country like Spain. Look, the cost of gas in Spain, based on the last time we got it, they update this website here on a weekly basis. 678. And again, our national average is 380. So that's double. That's 380 would be double that would be 760. So this is so almost well not quite double here, but this is 678. So again, when you look at gas prices around the world, the US actually has cheaper gas than most places, believe it or not. I mean, look at this here. Gas prices in Hong Kong, $11.13 a gallon. Yeah, how would you like to pay that? So the problem is these prices are only going to get higher. They're only going to get higher because again, OPEC Plus just cut 2 million barrels a day last month here for worldwide production. So this is only going to make the cost of oil go up worldwide. This affects oil prices worldwide. And pretty much everything else is just basically country taxes, statewide taxes here in the US. And the US can produce more oil. We're already the #1 producing oil country in the world, but it's not really going to bring our gas price down that much less because the price of oil is the price of oil. It's a global price. You look at the price of oil, these are worldwide prices. In fact, the U.S. here is actually on pace to be on record pace of oil production. They're trying to get back to that pace here, which they could get to if the oil companies actually just produced a little bit more. But that doesn't necessarily mean that the U.S. only is going to have lower gas prices. Because again, OPEC Plus just cut 2 million barrels a day. So if the U.S. produced 2 million more barrels a day, that would just equal the output for the world and would theoretically just make oil prices even Steven, right? Because remember, this is traded on a global stock exchange. These are global prices, guys. They're not just US prices, okay? The oil is traded on a global basis. Global basis. So let me know your thoughts here in the comments I'll keep you up to date here with everything you need to know here on a daily basis. Make sure to subscribe down below to our YouTube channel if you haven't yet. It's completely free to do so. Remember that new videos come out here every day at 10 a.m., 3 p.m., and 8 p.m. Eastern Standard Time. And you won't want to miss out here on this video, so click this video next about new checks coming out to millions of people here. This is a really good video, so click on this video next. Thanks for watching, guys, and I'll see you in the next video.